All right, welcome back for another episode of Carnivore Trades. Today is Tuesday, September 19th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. And let's get into it here today. So, a bit of a nothing burger when it was all said and done, but lots of whipsaw. So, we did gap down a little bit here today, and then we sold off into the lunch hour, and then you can kind of see the light volume kind of tailed off, and we started to float back up. We did get a little bit of a micro bid there towards the end of the day, and then just kind of chopped sideways for the most part. Still finishing red, so we did come nicely off the lows, but we didn't, it wasn't a red to green day. And spiders finishing exactly in line with the Qs, down 21 basis points each. The Dow was down 31, and the IWM, the big loser on the day, down 39 basis points, triggering that head and shoulders. Also confirmation now below the 200 moving average, so keep an eye on that. That's the first time since June, really, since that big breakup bar. So Russell 2000 is showing some signs of weakness here, but overall, our line in the sand is hanging in there, right? So we never closed below that. This morning in the short, I said we could go down to 44.25 and then 44.15. 4400 would be like your max move down, and we got all the way down to 44.25. I think the low of the day 44.16, so close to that second level. Never quite got to 4400. It would have been a little unusual if they broke this down today. I did think we would at least test this candle today, as I said yesterday, but it would have been a little unusual if we had a major breakdown the day before an FOMC, unless they leaked something. Like I said yesterday, if they leak to the Wall Street Journal that they're going to hike, that could spook the market, and it would cause the market to have to kind of reprice the FOMC, because essentially right now it is priced to be a pause. That should be the case, right? Powell he's not really in the business of surprising markets. It would be a surprise if he did that. But what is interesting though, so if we look at kind of from a macro perspective, the 10-year today closed at a 14-year high. If we go look over at the 2-year, that closed at a 16-year high today. These are closing highs. And if they pause, like I said yesterday, if they pause, 2 years not that far away from the Fed funds rate. That's the panic level, right? So that's the level the market is not going to like if the 2-year gets above that. So it's just interesting. They don't have a ton of wiggle room here, and the 2-year can move fast, as we know. When bonds start to move, they can go quickly. So it's interesting to me. I would think that a November hike is likely on the table. So we'll see what we get. The verbiage will obviously matter a lot. My guess is the first move tomorrow is up. I can't imagine the algos won't go crazy as soon as they leave their rate decision unchanged. But we'll have to see. Is it a fade the news, and really do we come down and take this level out? Another thing to keep an eye on, a lot of people talk about Thursday is kind of the Thursday post FOMC is kind of where the real move is. We also have the BOJ on Friday. Do not forget about that. That is a big deal. That might even be bigger than the Fed here. So they're going to give an update on their yield curve control policy. If they back that off look at what happened last time they did that. That started this sell-off. So again, just be aware. Bank of Japan later this week. So that can be something to keep an eye on. But again, all we care about is this line in the sand, 44.31, spot 6.8. You close below that, there is more downside. That's really what I'm looking at. It's that simple. There's also a trend line that we hit here today, right into that area. You can make a case. You got a nice little wedge starting to form there. A little bit asymmetrical, right? So this is a little bit on the shorter side, whereas this one kind of goes all the way back. But even if you wanted to, you could start the trend line here and say, okay, there's a wedge right there. Either way, we hit it. We're bouncing off it. Either way, it's going to have to pick pretty soon, right? So that's what we're looking at there with the SPX. And on the top side, obviously, that blue trend line there. Triple Q, same thing. Again, down 21 basis points. We did crack that trend line yesterday. We closed below it again today. Never really, had a huge convincing move here. Again, we essentially tested this green bar low, 366.23, low of the day, 366.80. So kind of close enough there. More downside takes you down to this trend line. It's starting to get a little asymmetrical though. That's the only thing I don't like about it, but it does coincide with the 100 moving average. So that is a positive there, but I would have liked it a lot more if we came down here. I really wish we would have hit it in August, because then you'd have a little bit, like these hits are a little bit closer together. I don't like it when you have a month and a half, two and a half months or so, and then 7 months between the hits. But either way, it does coincide with the 100 MA, so it is still valid. But again, Q's still hanging in there. They came off the lows. Apple had a nice bounce. Again, today, you could make a case though still. This is just, big move down, sharp drop. And you can make a case that's bear flag action. I do think Apple needs to go down and test 160 once it's all said and done, or before it's all said and done. But it is hanging in there right now. And obviously that got a bid today, helping out the Qs. Tesla also getting a bid today as well, which helped out. That saved that green bar from last week. IWM, we already talked about. That head and shoulders is triggered. We are below the 200 moving average. You can negate it with a close back above. So just be aware of that. If we close back above, I would say today's high, it's probably a negated pattern. Just keep that on your radar. Dow, not a whole lot going on. Again, same kind of test candle look as today with the SPX. Slight lower low though, so keep that in mind. And we hit the 100 MA again. If we break below this level, then again, I think the Dow is vulnerable down to about 338. Okay. SMH here down 86 basis points, kind of coming into this trend line as well. We'll see how that plays out. Really got to hold this pivot though. This is kind of the big level to me, more so than the trend line and the 100 MA, especially on a weekly close. That's an important pivot there for the SMH. IGV, slightly red here today, down 43 cents. Nothing crazy. Again, kind of testing this green bar, getting a little bit of a bounce off of that. Again, let's not make a whole lot out of it. There's still a lot of support at 340 if we do go down there. Transports here. Red again, down a little over 0.5%. And I don't like this. Again, I've been saying this. Down move, inside bar, down move, bear flag. We made a lower low today. Did finish off the lows, but again, not the greatest look. You break 15,000, it's down to the 200 moving average, around 14.7 to 14.8. Might not be quite ready yet. Might need to do a little more consolidation, but I don't like what I'm seeing in the transports. I don't like the jets. That probably needs to have one more little downdraft here. UPS, this one's been in the gutter here. A lot of these rail stocks, CSX, not the greatest chart. Norfolk Southern, if I can type it in right. Norfolk Southern, kind of down in the dumps there. But again, high oil prices with a slowing economy, not a good sign there for the DJT. Anyways, interest rates we already talked about. 2-year, new 16-year closing high. 10-year, 14-year closing high. 5-year, not sure what that is, but probably 14 to 16-year closing high there. Then the 30-year, also hammering on this trend line here. Not a new closing high, but very close, right? Nice pattern. Nothing bearish about that. XHB, hanging in there. So you can make a case it's kind of a sloppy head and shoulders. I don't love it, but you'd have a trend line in here. It held for now, held the 100 moving average. Maybe you make one lower high. If you take that out, it's down to this area. And then if you get through that, it's down to 72. But XHB holding up for now. I actually finished green on the day. VNQ, a little bit on the softer side. Starting to look more and more like it wants 78. But we'll leave it at that for now. XLF down 4 cents. KRE down 10 cents. We closed out a winner today on KRE on those puts I told you about. I still like this down into the 40 handle, 40 to 41. But going to the FOMC, don't want to look a gift horse in the mouth. KBE also finishing lower as well, hitting that pivot. If that breaks, it's down to 36 there. XBD lower on the day. That's still fine. That can still get through 510 and work its way up to 520. Crude here starting to look a little top heavy. So yesterday we did have that kind of big surge there on light volume. Remember, there was a contract rollover, so that is normal. And then we had a lot of volume here today. Again, new contract day, so it is normal to see heavy volume there, but it did come sharply off the highs. So look at the price action here. Pretty good dump intraday. And it's starting to look a little top heavy. I can still see it getting up into 93, 94, 95, but this may still need to pull back here. There's nothing to say this doesn't continue down into 87.50, maybe even test the 20 MA. I think risk reward here favors the downside. I can't rule out a move up to 93, 94, 95, but I think that's about it. at least for now. I do think oil goes to 125, possibly higher down the road, but I'm seeing way too many people say the same thing right now, and they were all calling for oil to make the crash, recession, this, that, and the other thing, demand destruction, a month or two ago, and now they're all calling for 110, 120. So just kind of got to get on the other side of that boat right now, but it's holding up. We'll see what it does. XLE outside move there, lower high possibly. So good reversal there, down 1% on the day. I still think that can get to double top though. Unless it does some real chart damage. First step is getting below 90, but today engulfing reversal definitely on the weaker side. XOP, a little bit of chart damage finally below that 20 MA with a good outside candle. So weekly starting to come back in and roll over a little bit. Still trending up though, but that is finally starting to come down. OIH, pretty good reversal, right? Look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days erased in one day on the OIH. And again, that was getting top heavy too. Look at that 100-month moving average. That may finally be starting to come in. CCJ, outside move down. That looks like it wants 37.50. URNM, engulfing reversal, essentially. That probably wants... bigger picture, if this continues lower, I'd look at it around 39. Just right off the bat. Look how extended you are from the 20-week moving average too. But short term, maybe a drop in pot play if you're aggressive with that 20 MA. Keep that one on the radar for a quick trade, but does look really top heavy. Nat gas, nice bid. A lot of speculation. This is the next hype energy sector if uranium and crude start to top out. Up 4% today. A little higher high. We've been following this wedge too. Nice breakout. Coming into the 200 moving average. That is minor. Doesn't mean it won't be resistance, but it is parallel to price. So it is not minor. What do I mean by that? If we came up like this and went up into it, it would have been major. If we came up like this and went up into it, it would have been major. But do you see how it's gradually catching up to price? Makes it more on the minor side. Doesn't mean it can't hold, but it's less so if we went straight into it in an overbought condition. We've just flagged for 4 days. We just made a higher high too. But big level, 286. Above that is 3. Above 3, it's moon time. Dollar index holding up. Okay. 105.15 close. No problems there. That still should get to 106, 106.50. I didn't think the dollar would really sell off before the FOMC either, and it has proven to be true so far. That still should get to 106. Gold still in this wedge here. See how that does. Got a slight lower high there. So if that starts to come in, maybe you could make a case if we adjust that. 1, 2, 3, 4 hits, and then another one. So it could be a lower high. Don't want to see it break that, and you want to see it hold 1900 if you're a bull. If not, it's going to 1830, 1825. Silver pulling back just a little bit, stalling at the 200. A little bit of a bounce. You do have kind of a, you got higher lows there for now, but you got to hold this area here. But I still have a downside bias on silver. Platinum still can get to 960. Palladium, nothing burger again. Copper pulling back, but not a broken pattern yet. That can still get to 390. Still have a little bullish inside bar there. Little test candle today. We'll see how that plays out. That can still get to 390 until proven otherwise. You take this out on a close and you get below this, then we're going all the way down to 340 though. So be aware of that. Lastly, everybody's favorite, Bitcoin. I don't know, it's holding up, gotta admit. So testing that 50 MA again, reject yesterday, and held inside day today. Well, it made a slight outside move, but closing inside. So it's holding up. Give it a little credit. I'll give it the upside bias here. You got that red bar if this consolidates here. And you can consolidate beneath 27.7 area. Then maybe you can have one more push up. You test this breakdown area. 28.6, right? That's where we broke down. We never quite got there. So we'll watch that. But it's hanging in there. Bitcoin's holding up. Ether a little bit on the weaker side, just for what it's worth here. Bitcoin's still kind of the lead dog here performance-wise. 200 MAs at 28,000 as well, but nice little recovery there for Bitcoin's holding up. Lastly, again, I'm going to say the same thing I've said for the last 2 weeks. The only thing that matters right now is this green bar low. You get a close below that, it opens the door for more downside. Bulls here, you want another hammer on this, and you want to push through that. If you do that, you're in pretty good shape, and it's likely that you've got a nice tightening range here. Bears, though, got to break this level. You do, especially on a weekly close. Then we can talk about more downside and look at it, kind of going into October, November. But until then, market is technically safe for now. But again, FOMC tomorrow. Again, not expected to hike. My guess is first move is up. We'll see if that fades. And we'll see Thursday if we get a bigger move or an opposite move, the real move. And then again, don't forget about the BOJ Friday. That's going to be big, possibly even bigger than the Fed. Anyways, guys, going to wrap up here. You guys take care. Come find me on CarnivoreTrades.com. I will talk to you guys all tomorrow.